Hello traders, Doc here. Today I'm going to talk about the chart patterns. If you like my content, please subscribe and like this video for more. Chart patterns are one of the most effective trading tools for a trader. They are pure price action and traders use them to identify continuation or reversal signs and to open positions and identify price targets. In technical analysis, these patterns are used to predict future price movements. In general, all patterns trigger a long or buy and short or sell entry when horizontal or diagonal support or resistance is broken. Here on this list you can see the most popular patterns like double top, double bottom, flag, triangles and wedges. Also here you can see some patterns that are not very popular like diamond and cup and handle. Chart patterns that I consider very useful are double top, double bottom, bearish and bullish flag and also triangles. There are three main types of chart patterns: continuation, reversal and neutral. On this list you can see bullish and bearish continuation and also bullish and bearish reversal chart patterns. Triangles can be considered as a neutral chart patterns and I have specific strategy on how to trade them, but I will show that in my other video. Here I put them as a continuation chart patterns because many traders also consider them as a continuation patterns. Today I will talk about the double bottom and double top, I will talk about the flag and I will talk about the wedges. Let's explain the difference between continuation and reversal patterns. The trend continuation chart pattern appears when the price is trending. If you spot a continuation pattern during a trend, this means the price is correcting. So these patterns indicate that a new move in the same direction is likely to occur. For example, here we had the uptrend, then this bullish flag occurred, and what happened next? Price went up. So we consider this as a continuation chart patterns because price continued to go up. Or for example here, so we had a downtrend and then this bearish wedge occurred. So price continued to go down, but reversal patterns appear at the end of a trend. If you see a reversal formation when price is trending, in most of the cases price will reverse and continue to go on the other way. For example here, we have uptrend, then this bearish reversal double top occurred, and then price went down. So price moved in the opposite direction than before. Or for example here we have inverted head and shoulders, we had downtrend, then this inverted head and shoulders occurred and price reversed and went up. So this trend and this trend are different, that's why we call this reversal chart patterns. First I want to explain this flag pattern. It is a continuation chart pattern because we expect price to continue in the same direction as before. As you can see here we have uptrend, so price went up. And then this flag chart pattern occurred, price broke it and continued to go up. So after price breaks this flag pattern, we expect price to continue to go in the same direction as before. In this case, up. So this is a bullish flag and also we have a bearish flag. It is different because bearish flag occurs in this downtrend. So we have downtrend and then bearish flag occurs. Price breaks this downtrend line and continues to go down. Flag chart pattern occurs when this upper and down trend line are basically parallel. So we have lower highs formation. So we have lower high, lower high, lower high, and also lower low formation. We have low, we have lower low here, lower low here. And in this case, price failed to push down. And this was indication that price will break this upper trend line and continue to go up. So when we have trend lines that can connect lower highs and lower lows and are parallel, we have flag pattern. So after some time and few touches of this upper and down trend line, price finally broke this upper trend line and continued to go up. Same goes for bearish flag, but this time these parallel trend lines are a little bit angled up. And this time we have higher highs and higher lows. And after price breaks this downtrend line, we expect price to continue to go down. Next, I want to explain wedges. They're a little bit tricky because we consider them both as a reversal and continuation chart patterns. I recommend you to stop the video, take a screenshot because this picture will help you a lot and there will be no confusion when they are considered as a reversal or continuation pattern. So we have a rising wedge and we have a falling wedge. Rising wedge occurs when these two trend lines are angled up, okay? And basically they're rising. That's why we have a rising wedge. Also here, we have two trend lines that are rising. The difference between flags and wedges is because here we have these two trend lines that are about to cross, and with the flag these trend lines are parallel, as I said before. Here we have a rising wedge and this one is considered as a reversal pattern, but this rising wedge is considered as a continuation. So what's the difference? So this pattern and this pattern are basically the same, but what is the difference? The difference is trend. Here we have downtrend, okay? So before this pattern we had a downtrend, but here we had the uptrend. So the key difference is trend before pattern occurred. If it occurs after the downtrend, then we expect price to continue to go down, break this downtrend line and go down. That's why this one is considered as a continuation. But here we also expect price to break this downtrend line and go down, but this time it is a reversal because price here went up and then we expect it to go down, to reverse. Also, we have this falling wedge. This time these trend lines are angled down here and here. This pattern and this pattern are the same. But what is the difference? As I said before, it's trend. Here we have downtrend, but here we have uptrend. This time, when price breaks the upper trend line, we expect price to continue to go up. So we have a continuation trend pattern. But here, we expect price to break this upper trend line and go up and reverse because we had downtrend here. We had the uptrend here, then this wedge pattern occurred and price broke this downtrend line and went down. Price reversed. We had uptrend here and here we have downtrend. That's why this is a reversal trend pattern. Take a look at this example. So we have uptrend here and then we have these lower highs and lower lows. We have two trend lines that connect these highs and lows, and price then broke this upper trend line and went up. So price continued to go in this previous trend direction. Also, when these patterns occur, you want to do proper technical analysis. Don't just mark them and expect them to work. Combine them with the other tools, with indicators, with candlestick patterns, with weak rejections, with retests, breakouts. For example, here we can see that price broke this upper trend line. So we expect price to go up, but also we want to analyze this price structure, and this time we can see that price formed multiple weak rejections and retested this previous lower high, and then it formed these two strong bullish candlesticks. So this was another sign, another confirmation that price will continue to go up. So we have more reasons to believe that price will go up, not just because pattern occurred, but also because some other things happened, like weak rejections, retests, and candlestick patterns. So the best way to use trend patterns is to combine them with the other tools, with support and resistance, with candlestick patterns, with weak rejections, with indicators, or whatever you like to use. Here we have an example of a double top and also double bottom. This was a very interesting formation because in a short period of time both these patterns occurred. This one is called double top because we basically have these two tops, okay? Price goes up and then goes down and then goes up again to reach the same level as before. So in order for this pattern to complete, we need to have these two highs at the same level. Then price goes down, breaks this neckline, we call this neckline, and goes down. The same analogy goes for a double bottom, but this time we expect price to reverse and go up, like you can see here on this example. Here we have another example of double bottom. This time this neckline formed at previous low level here. As you can see here, it basically retested this previous low level, giving it more significance. And as we can see here, price broke this neckline with this massive bullish candlestick, then formed a minor pullback and continued to go up. So here we had downtrend, then double bottom occurred. Price broke this neckline with this strong bullish candlestick and went up. So basically price reversed. We had downtrend here, double bottom, uptrend. So in a technical analysis, it's very important to combine these patterns with the other tools, like I said before. This is one beautiful example how to use them and combine them with the other tools. So here we had these lower highs and price retested this significant zone. Price broke it and then went up to retest this significant zone and basically retested it with this double top. If you need, you can scale down on a lower time frame. Sometimes it is easier to spot them on a lower or higher time frame. This time it was easier to spot this pattern on a lower time frame, but also you can see it here. Price from this first top and then this second top with this beautiful bearish engulfing candlestick pattern, and then broke this neckline here and continued to go down. So we have this minor uptrend here, double top formation, break of a neckline, and then massive bearish move. So what we did here, we combined this pattern with this structure, okay, with these lower highs, with this trend line, with this significant zone, with the bearish engulfing candlestick pattern in order to find good entry point. So all this combined gave us good indication that the price will go down, and as you can see here, it went down. Here we can see another example when two patterns occurred one after another. So basically here we have triple top, first, second, third one. This is a neckline. Price broke this neckline and went up to retest this neckline, and it retested it with this double top. So price tested it once, went down, up again, tested this significant zone or previous neckline, and then again went down. So basically we have a triple top retested with this double top. You can have a little bit aggressive approach and sell at the second top formation, but it's a little bit risky because we don't know for sure if price is going to break this neckline and continue to go down. A safer option is to wait for price to break a neckline and to confirm this pattern and then sell. As you can see here, price broke this new neckline, it retested it again and went down. This time I want to show you some examples on the charts. As you can see here, for example, we have this uptrend, then price went down and then up again to test this previous high. So basically here we had one top, here we had second top. Price then broke this neckline with this strong bearish candlestick and retested it again, and finally went down after this massive bearish candlestick. As you can see, next price went down, formed strong bearish move. Look at this move, very strong bearish move. Here we have very interesting formation where two chart patterns occurred one after another. So we have uptrend here, as you can see. Then we have this pattern. As you remember, we have two parallel lines that connect lower highs and lower lows, and this is a flag. It's a bullish flag because we expect price to go up, and that is exactly what happened here. Price broke this upper trend line, continued to go up, and then formed another pattern. This is a symmetrical triangle, but I will talk about that in my next video. Price then broke this symmetrical triangle and continued to go up. So if you decided to buy here after this breakout and to buy here after this breakout, it would have been a good decision. So let's say you decided to buy after this breakout and after this breakout, and as you can see here, in both cases it was a right decision because price continued to go up. Here we have another example of a double top. So price went up, formed this double top, okay, first top, second top. But what is interesting about this case is if you look at the past price movements, you can see here that this was another high. Price went all the way up to test this previous major high with this double top pattern. So when price tested this previous major high with this double top, we had more reasons to believe that price will reverse. And after price broke this neckline here with this strong bearish candlestick, it formed this massive bearish move. Look at this move. So it was a very good decision to sell after price broke this neckline here. Here this is another example of a bullish flag. We have these two parallel trend lines. They connect lower highs and lower lows. Price then broke this upper trend line and retested it. This time retest occurred and price continued to go up. Here we have example of a double bottom, but what is interesting about this case is that this pattern occurred at the previous significant zone. If you look at the previous price movements, you can see that this double bottom occurred at the key zone, which I will mark right now. Here, as you can see, price formed this high, broke this previous high and retested it, and it went all the way up, and then after some time it went down again to test this previous zone with this double bottom. So this time we had double bottom pattern and we had this significant zone. So we had more reasons to believe that this double bottom will be successful and that price will reverse. And also, as you can see here, price retested this neckline with this strong bullish candlestick and price went all the way up. So these are some examples that I wanted to show you today. The one thing that you should remember is that these patterns do not work every time and that you should combine them with the other tools. I hope this video helped you, and if you liked it, please like this video, subscribe, and also you can visit my Instagram page and Telegram channel where I'm very active with the daily content. Thank you very much and see you in the next video. Bye bye.